Hey folks, this is Dr. Camarda with your Monday COVID-19 update. And I'm wearing this protective gear, although I'm safely at home, just to emphasize how important it is to take safe protective measures. Your health is clearly the most important thing, and we are all at a risk. We are all at a risk as things spreads across the globe, and need to be very, very careful to avoid contact with the pathogen, with the virus. So anyway, here's my update for today, Monday, March 16th. Clearly, the virus continues to sweep the globe. Continental Europe is near total lockdown, and the U.S. is getting there as increasingly restrictive social distancing measures are taken. Hopefully, the United States has acted in time to avoid a horrific Italy-like experience. Only time will tell, but please, please be careful, distance yourselves, follow the recommended social distancing and disinfectant best practices. And the safest thing you can do is not interact with other people, not go where others have touched surfaces, and stay home. Camarda has gone to work from home status. Please see Kim's detail on this in the text part of the email below. For the protection of clients and their families, we will be conducting meetings exclusively via phone calls and video conferences until conditions ease, hopefully not too far down the world. Now, COVID-19 has clearly already caused a recession. The economic impact is very difficult to predict. I mean, it's obvious what's happening in the cruise industry and the airlines, the oil companies and so forth, but the ultimate ramifications of that are really too deep in the tea leaves to infer accurately at this point. And the stock market, largely because of the uncertainty, has predictably reacted very swiftly. Now, we salute the Fed's action over the weekend to lower interest rates to zero, and believe this and other soon-to-be-enacted government stimulus and other actions will soften the blow and allow the economy to recover sooner. But it is going to need substantial recovery. There's no doubt about that. Now, in the end, we think that we'll find from the emotional comfort of historical perspective that the markets very deeply overreacted, overshot, oversold, and driven prices far lower than really makes any sense. And then the actual economic impact would dictate. So we continue to view this as a buying opportunity. We believe stocks will strongly rebound in a matter of months as the new recession fades. The speed of this recovery will be largely determined by how effective our social distancing measures are in curtailing and containing the viral spread. If it gets to the point where it spreads so fast that we run out of hospital beds, as has happened in Italy, that creates a whole significantly higher order of problem. But hopefully that won't happen here. China's recovery appears to be very swift. They've taken more draconian measures than are likely in the United States, but I think we have a number of other advantages. So if the U.S. is fortunate to follow or even improve upon the Chinese pattern, the economic damage should be minimized. So I think it's clear at this point that we will lose at least a year's quarter of economic expansion and stock market normalcy. Hopefully it'll only be a quarter. Let's hope and pray. That's all that we lose. But in the end, this almost certainly will pass. So please be safe. Don't worry, particularly don't worry about money. Be careful about your health. The markets have always recovered strongly after crises like these, and I have no doubt that the pattern will be the same during this crisis. Please remember, your health is the most important thing. Don't take needless chances. You can always make a little bit more money. You can't recover, from devastating health impact. So please don't worry about your money. Just chill, and I'm sure we'll get through this. Just pray and be careful. So until next time, which will probably be tomorrow. This is Dr. Jeff Camarda, and thank you so much for watching and staying calm. Thanks.